Hey there, it's Daven Michaels, and today I'm with my great friend Adam Wynns. It's great to have you here, buddy.
Hey, thank you for having me.
Sure. Today we're going to be talking about money, and money is something that we don't talk about as much. It's kind of like in the schools; they never talk about money in schools, but we're always talking about entrepreneurship. But what I've learned over the years, from both my own personal experience and from other entrepreneurs' journeys, is that it's not about how much money you make, it's about how much money you actually keep, right?
Absolutely.
Yeah, and you and I were talking about your personal story where you experienced that as well. And there's a myth, and that is that most millionaires, decamillionaires, are made because they came up with the latest technology, startup, patent, or what have you. That's really not the case. 85% of all millionaires worldwide are made simply because they saved their money, they were somewhat frugal, and they invested. Right?
Correct.
And I know that most of that wealth usually comes from like home ownership. You know, they might have made 50, 60, 80,000 a year, didn't really invest much, but they did invest in their house, and then that house went up, they paid it off, and then they're sitting on top of several $1 million. They're a millionaire. Now, I read an interesting statistic the other day, which I thought was fascinating and kind of made me happy too, and that is that most millionaires don't pay 30 years of mortgage interest. So if you have a home, you've got a 30-year loan, you're gonna, basically if you have $1 million house, you're gonna pay almost $2 million total. So you're gonna pay $1 million in interest. And I read that most millionaires, you know, they pay off their house in 15 years or 10 years or 8 years. And I felt pretty good about that because one of my goals was to pay my house off early. And I did that. And I looked at it, I was like, do I really want to put that much money in an asset that doesn't have any, you know, real intrinsic, well, it doesn't have revenue. So it certainly has, it goes up in value, but it's not revenue producing. I have a lot of friends that own thousands of apartments and what have you. They're big real estate investors. They own a massive amount of investment real estate. They rent their own house because they're like, well, that doesn't produce income for me. So there's an argument for that as well. So I felt pretty good about that statistic.
I do the same thing.
Okay, cool. That's awesome.
Yeah.
That's awesome. So, Adam, you have a great story. You've done some amazing things. So can you share with our audience a little bit about your background, how you ended up doing what you're doing?
Yeah, absolutely. So by nature, I am an entrepreneur.
Same here. Same with probably everybody out there watching.
Absolutely.
Or they want to be an entrepreneur.
Yeah, of course.
Yeah, right.
So, you know, I threw my hat in a lot of rings and trying to throw a lot of things at the wall and see what stuck, what I liked.
That's kind of what entrepreneurs do, right? They end up falling into stuff. I know I fell into things. Did you fall into opportunities?
Absolutely.
Yeah, sure.
Absolutely.
Yeah.
I mean, this opportunity that I'm in now that we're going to speak to about in a little bit, money, that opportunity is something I focused on, but actually how I got into that process was something that I fell into, thankfully.
And by the way, too, I think the reason for that is that entrepreneurs are open to opportunities. Right?
Absolutely.
So they're opportunity seeking. They're looking for opportunities. Now, quite often, entrepreneurs do the shiny, bright object, right? So they go from one to another to the next. So I think a successful entrepreneur is open to opportunity. They're able to, you know, quickly and in a good manner, able to sort of vet an opportunity, make a decision, and then focus on one.
Absolutely. Right? They're very good at making decisions. Yeah. What sometimes is the problem is they're not always good at math. Right. And myself, I was horrible at math.
I'm terrible at math.
I was an entrepreneur, right? So when I was in school, my dad always said, your math grades are horrible, Adam. Yeah. I said, Dad, I don't care. I'm going to hire an accountant.
Yeah.
Right? And I went one step further. I didn't only hire an accountant. I partnered with a NASA mathematician.
Right, exactly.
So, you know, I've taken that mathematics to the next level. So it's funny what you said about home ownership. Yeah. Because there's a lot of this math that isn't well understood because we're purposely, our education only comes from the marketing, right? So it's really people like you and I who are marketers and entrepreneurs. Yeah. We're selling our product. So the people selling you that home and the people at the banks, they have an interest,
vested interest
in you giving them more of your money than keeping it.
That's right.
And that's the big deal. And a lot of people say, well, I'm just going to get away from the bank then, and instead I'm just going to take all my cash and I'm going to put it into my house. Yeah. So I have the story of Don Corleone and Don Corleone's house.
Yeah.
Okay.
The Godfather.
The Godfather, right? So we all know that movie.
Right.
It's a lot of people's favorite movie, right? Well, Don Corleone's house was bought in the 1970s. I believe it was 1977 for $195,000. Okay, this is Don Corleone from the movie The Godfather. This house was bought.
So are we talking about the house in real life?
The real life
The
house
real
that was
house.
in the movie.
Okay.
Someone bought it.
For a couple
the
hundred
owner
grand.
Bought it for almost 200 grand.
In the 70s?
Yeah.
Was it in LA? I'm just curious.
No, it was in New Jersey.
New Jersey, okay.
It was in New Jersey,
Okay.
yeah.
Okay.
And it's for sale right now.
Okay.
For $1.3 million.
There you go.
So that's 42 years.
Yep.
Where it only grew to $1.3 million.
What is that, about 400%?
7x, 7 times.
700%.
So you've 7 times your multiple.
Yeah.
You've only grown 7 times.
Yeah.
Okay?
Now you're saying only. A lot of people would be like,
That's great.
Yeah.
That's great.
Right.
Now, that same multiple, okay, that same money, let's say you buy a house for $2 million.
Yeah.
That same $2 million that you put into that house is only going to grow in 20 years to be $7 million if you're the Godfather. If your house was in the movie The Godfather, mathematically,
Right.
it's only going to grow to $7 million. So you go from 2 to 7.
Okay.
Okay? Now, if you find a good investment, whether that's an index fund or something like we do at Globus Wealth, which we'll get to later,
Yeah.
if you find something that gives you a great return, okay, above 10%, we're at 12.5. So if you find something that gives you 12.5, okay, you're leaving $16 million on the table, a very large amount of money
Wow.
that you're leaving on the table by saying, I'm comfortable and I own my house. Why?
Yeah.
Because money from the banks is cheap.
Yeah.
It's cheap money. So if you can find something, if you can get the money for 4 or 5%, and you can find something that makes 10 or 12% over the long term, you're going to be able to compound and grow. And you need to find something that's really going to let you compound and grow.
Right.
And yes, there are great ways. Real estate is a great thing.
Yeah, and one point we do have to make, what makes real estate great for people who understand it really isn't the appreciation, it's the leverage. Because the odds are the person that bought that house for 200K, I'm hoping, put down 20, 40K and then used the bank's money. So their investment was like $40,000
Right.
as opposed to 200.
Absolutely, but a lot of entrepreneurs, they're very focused on what they do. It's like people that own charities, right? They have a very good cause.
Yeah.
And a lot of people and entrepreneurs, that's our baby. We put everything into it and we give everything back to it. And a lot of times we forget to pay ourselves.
Yeah.
Or we pay ourselves in the wrong way. Like we put all of our money into our house thinking that's security.
Right.
But it's not generating any income.
Yeah.
Like you said, multiple bigger properties that are apartment buildings with rent after rent after
Right.
rent after rent
Right.
and income, that's a great investment. But owning your own house, it's a personal preference. It is not an investment.
Yeah, and I agree with you. I mean, there's really two different ways to look at it, and both of those arguments make sense, right?
But the math never lies.
The math never lies. Okay, so let's talk about that. So first we're going to start with your background.
Sure.
So how'd you get where you are today? Tell us the story.
Well, I first started out in the entertainment business, of course.
We have that similarity.
Very much.
Yep.
In music
Yep.
and in the nightclub scene and all of those types of things.
Yeah.
And as an entrepreneur, I didn't find it super fulfilling, okay? Because
Same here.
there's a lot of people in that business that they're friends with you
Yeah.
because of what you have.
Right.
And,
And also, I found that there wasn't a lot of stimulation because the movers and shakers are not in the club scene.
Right.
They're on the cusp of fashion and art and all that, which is great. But I was craving like mental stimulation.
Absolutely.
Yeah.
And I just couldn't find it in that space whatsoever.
Sure.
So I took a sabbatical, and I had gone into some different businesses. I had limousine companies and tanning salons, and we actually went and invented a spray tanning machine. So
Okay.
I was one of the first guys in the spray tanning business, and I was on Fox. My commercial went nationwide, and the guys that we were representing didn't want to broker a deal, so we went off to build our own machine. The gentleman who I learned from and mentored in business was actually a boat builder. So he said, well, before I'll build your machine, because he's an engineer, MIT engineer, he said, I want you to go to Russia with me. So I went for a 3-week business trip, and I ended up staying 3 years.
Wow, where were you? St. Petersburg or Moscow?
Well, first I was in Moscow and then St. Petersburg.
Okay.
So for 3 years I was in St. Petersburg, and since I was in the let's say, upper echelon of local celebrities where I come from, I actually got into that same crowd in Russia. So I was friends with all the actors, all the, the guys in the big bands and the TVs and movies.
Was that fun?
It was fun. Yeah. It was fun. But for me, was my sabbatical to find myself. Because like an entrepreneur, I was throwing a bunch of things at the wall, and this really wasn't sticking. And then like I said, I tried the limos, and I was in the tanning business, and I'm like, none of it was fulfilling to me. It wasn't what my heart desired. It wasn't making me happy.
Now let me ask you a question. I know that because you and I are buddies, I know that at a certain point, you had this moment or this time period where you decided to design your life, to have a life that you designed rather than a life that the world and fate dictated for you.
Absolutely.
Was this the beginning?
This was the first pivotal moment. So my wife and myself, you're an artist like I am. Yeah. I create music. I have my own CDs. I always love to go in the studio. Yeah. And I had written about 20 songs or poems or whatever you want to call them at the time. They were songs. And I just went over them the other night with my wife, and I read through them, taking me back to that time in my life. And I was really just finding myself and what I wanted. And that's the number one thing that most people don't get. And I read it again, and it goes back to Napoleon Hill. Being an entrepreneur, Napoleon Hill. In the first 3 pages of Napoleon Hill, it says, if you understand this, you don't need to read any further in the book. And it's basically your burning desire. What the heck do you want? What do you want? How do you want to design your life? It says that in the first 3 pages. You don't have to read any other book after that. It's the Bible of entrepreneurs. And what I figured was, I need to figure out exactly what I want, who I am, what I want, and how I want my life to be.
And by the way, you made a really good point there, because what is that? It's intention, it's focus, it's manifestation. Call it all the same thing. It's what you focus on is the direction your life is going to go in.
Absolutely.
Right. Okay. So go ahead.
And it went even a step further.
Yeah.
If I can bring this into the equation, my son and my daughter. So I have 3 children. Well, 4, but 3 that live with me here. Yeah. And we had an Easter egg hunt, the local Easter egg hunt. Right. And I told all my children they have these golden eggs, which is my partner Ron, which we'll get to in a minute. He said, Adam, we have the golden goose that just has the golden eggs. So I told all my kids, go after those golden eggs because they're filled with money. Okay. So I put the intention, I implanted it into them and said, go after those golden eggs. And my oldest son, he saw the kids cheating, and they were running fast, and they didn't say go yet. Those kids were doing their thing on the side, and they were getting these eggs. And my daughter paid no attention to those other people. She was only focused on that one intention, which was the golden egg. So my son's brain, he thought, oh, those golden eggs are gone already. They cheated. They ran ahead of the race. Okay. And they were doing, it's what a lot of entrepreneurs and people like me run into. We're looking at this guy, what he's doing, and that guy, what he's doing, and all these different things. And we lose the focus on our own golden egg. Okay. And guess who got the golden egg?
Yeah.
My daughter.
Your daughter, yeah.
Because she didn't pay attention to anybody else. Right. My son, he was running faster, going after everything. My other young son followed him. Okay. They got no golden eggs.
Don't want to be a follower.
Exactly.
That's right.
Because they both didn't get the golden eggs. Right. My daughter, who focused only on the fact of getting the golden eggs, right. She only knew golden eggs. She didn't see anything else.
Yeah, what you focus on.
And when you only see golden eggs, that's exactly what you get. But that's the number one problem when it comes to money, when it comes to your life, when it comes to everything, is not knowing exactly what you want.
Right, because how the heck are you going to get there if you don't know what the heck you want?
Exactly.
Right. So now you're in Russia. You've had this epiphany that it's time for you to design your life. So tell me what happened there.
Yeah, well, of course, being an entrepreneur, not everything goes as planned. Right. Okay, so I had gotten into a relationship which I didn't really want. Okay, so it was just what life gave me. Yep. And a lot of times people just accept whatever life gives you.
Absolutely.
All the time, because it's easy, it's comfortable. Yep. Okay, I want to be loved, or I want a bunch of money. And I wasn't specific about my intentions. I just said, I want love and I want to be rich. Yeah. Well, what the heck is that? Right. So I got whatever life gave me. Sure. And it didn't work out because I got what I didn't want. I got what life gave me. Sure. So I really doubled down and I said, man, I'm going to make a list of what I want. First, there's that health, wealth, love, and relationship type of person that you need to become. You have to stand firmly. You got to sit firmly on 4 legs. Okay. No matter where you go, everybody knows it. It's one of those ingrained principles. You got to have it all. So my relationship was really off kilter. My relationship with myself, my relationship with my spouse, and what I wanted for myself from my spouse, because being an entrepreneur, every powerful man has a powerful woman behind them.
Yeah.
I didn't have that.
Yeah.
And why didn't I have it? Because I didn't know that I wanted that.
Right.
I knew what I didn't want, and I didn't want a woman that wasn't behind me and on my team. So I went and I made a list, and it was very selfish. Very, very selfish. Most people would say, you remember Tony Robbins' movie, Shallow Hal, right? Where they hypnotized them.
It's a great movie.
And essentially, the basis of most successful people isn't that. You have to know what you want and then focus on that, which is hypnotizing. It's believing that that's what you want and that's what you'll get.
And you have to have a big why. So you have to, I mean, look, you're going to be selfish in what your wants are. I mean, that's okay. I mean, you have to have a big why or you're not going to go for it.
Absolutely.
Okay, so you make your list.
So I make my list, and I didn't think I would get it. I was like, maybe I don't deserve it. It's too...
By the way, too, I love, not to interrupt, but I love your list. So I know that one thing was you wanted to have tall, athletic children.
Yes.
So what did you do? You got a tall, athletic woman.
Yes, 6'1". I'm 5'6".
Right, that's awesome.
So that was on my list, a woman over 6 foot tall.
Right.
I was very specific about my intentions because being younger, I was a swimmer. And I got to a certain level, pre-Olympics, but I didn't grow any higher, and you have to be over 6 foot tall to get that.
Yep.
So I wasn't also positioned for success. My parents were just average Joes. I was, at the age of 4 years old, I would sit outside with a big sign, lead magnet, free tadpoles, because there was a bunch of tadpoles in my pool. And I said, well, these tadpoles are cool. Maybe somebody else thinks they're cool. And everybody that came up said, oh, look at the cute little boy. Here's $1. I'll take your tadpoles. They probably tossed them out. But I first figured out, okay, I can start exchanging what I think is valuable to what other people is valuable by just having good real estate and marketing that.
Yeah.
But that's who I was born as. Not everybody is born as an entrepreneur.
Right.
And that's why you have to figure out, and a lot of people think they're entrepreneurs and they're not.
Right.
So that's the main thing in figuring out what you want, because being an entrepreneur is not easy.
Nope.
It's not easy.
Nope.
Not easy at all.
Not at all.
And even knowing your own math, it's not easy. And making these lists and really knowing what you want, that's the hardest part. Once you can get past that, life starts to sail much smoother.
So you made the list.
Made the list.
How'd you make it happen?
I just focused on the list.
There you go.
And it came to me. So I was introduced to this woman and they said, well, what are you looking for? Somebody asked me, because normally I would say, well, I don't know. Well, I knew exactly what I was looking for. So I said, I'm looking for this, I'm looking for this, I'm looking for this. I know just the girl, I should introduce you. So lo and behold, we're in the restaurant, have our first meeting, and it was love at first sight.
Wow.
And all of my wants were all of the checks on her list. And it wasn't 100%, okay?
Yeah, sure.
It's 90%. And that's what you have to accept in life. You can't be a perfectionist where you're like, this isn't right, that isn't right. 90% is good. That is success.
And over time, you'll grow together and you make your compromises. And, a relationship has compromises too.
Absolutely.
Sure.
But at 90%, you're pretty much golden.
Yeah.
You're pretty much golden. And for that, a lot of people say, oh, Adam, you're so lucky. You've got a beautiful wife. She's a former model. That was on my list. Former model was on my list. Just really ridiculous things. I mean, I had hair color, eye color, the way she smelled, very specific details that for me, I noticed getting what I didn't want to figure out what I did want.
Right.
But once you figure that out, you got to take that fast action to really go for it.
Sure, but you really made a good point. A big chunk of it is just getting clear on what you want. And so many people don't do that.
Yeah.
Okay, so you're in Russia. What was your business then? And give us your business background.
Yeah, so what happened was I was in the nightclub business. And one of my investors had a place in Russia. So they were in the concert business as well. So I started working in the concert business. They had brought over the Rolling Stones and David Copperfield, and we can go on and on about the stories about that. We've all got our, our music stories.
Yeah.
And what it taught me was we did a show there. We did a rave. We actually called it a cave. So it was a concert rave.
Yeah.
And I called it a cave. So we rented this big stadium. We organized all the bands, the DJs.
Yep.
And one of those DJs didn't show up. So I ended up being the headliner because why not? I always wanted to do it. So
Totally.
I'm like, okay, we'll fill up 20,000 people in the stadium. Never done that before.
Yeah.
It's really like, it was one of those things on my list up here.
So funny how we have these parallel universes, because this is what I used to do, in LA.
And that's the thing about where we live. I mean, we're surrounded by entrepreneurs who are very similar to us. We meet guys all the time, and that's one of those good things. You have to surround yourself with people that are even better than you.
Yeah.
So you've taken it to levels that I never did. So when we're doing the concerts, it was really nice and interesting, and I learned the power of MTV.
Mm-hmm. Yeah.
The power of TV is huge.
Huge.
So I made a lot of friends because it's all about networking in that business. And I networked with the founder of E! Entertainment Television, named Larry Namer.
Yeah.
Founder of the E! Channel, home of the Kardashians. At the time it wasn't, but you can go Google about his story and who he is. Had accomplished a lot, a real lot. And he was opening a television station in Texas. And asked me, he said, Adam, I know you're a really creative guy. You've done a lot of things. I need a television show for this new music channel. And knowing my experience with MTV in Russia, we bought 500 spots, put myself on the commercials and our DJ on the commercials, and filled it up.
Yeah.
Right?
Well, what was the channel that he was creating?
It was called Your Music Channel.
Your Music, okay.
Yeah, it never actually launched, which kind of was great. It was a failure that actually launched me to where I am today.
Okay.
So what had happened was I learned what payola was.
Yep.
So payola is where
It's how all music gets on the radio.
you pay. You pay to play.
And it's a misnomer. People think that music's great, everybody will love it. It's all paid.
It's a business.
a
Nobody
business.
cares. They think music. That's the worst thing about most artists and most people. They think, I got discovered on YouTube. That's a backstory that somebody marketer made up.
Yeah.
It's not true. It's very rare. Maybe they found somebody there, but there's a whole business pushing everything, and that's what we learned. So I patented payola, basically the ability to buy and sell airtime, and I was one of the first adapters to YouTube. So we made our own YouTube where you'd buy and sell the airtime. When I had that situation where it wasn't what I want, it was starting to affect my choices in my business too, because I had offers from Fox to buy my company for, come into their organization. They had just bought Rupert Murdoch's right-hand man, Marty Pompadour, had just bought MySpace at the time. And they were looking for, something else. Of course, they didn't really understand the internet because, mind you, Marty Pompadour got his emails by fax.
Okay.
Yeah. So those are the people making the decisions in that business too. So it was really hard for me because it's an old style business.
And by the way, I presume that the purchase of MySpace was like a huge failure for them, right?
Well,
because at first it must have been fantastic.
At first it was fantastic because it was the first high level acquisition that anyone in our space had heard about, right? The first internet, there was the guy that owns the Mavericks. What's his name?
Yes.
Yeah, he got lucky on something that he did.
From
Brian from Shark Tank.
From Shark Tank. Right?
Yeah, that guy. But that MySpace thing was really big. It was something we were all involved in, especially with people who were involved in the music and the bands, and it was the first time internet video was really seen. The YouTube videos, you can embed them there. We were doing a lot of really creative things with that, and it was the first big acquisition. And the first thing they did was they kicked out Tom, right? Every guy that steals your company with vulture capital, I call it. They came in and stole the company. So one of the caveats to them buying my company was I had to move to the US. My ex-wife at the time was German, so that wasn't happening. So luckily, I fortuitously was at the right place in the right time, which is the Cannes MIP TV, which is the Festival de Cannes for television. Yeah. So I got together all my money after Larry called me and says the show isn't launching. Oh my goodness. I invested all my money. I patented it. So I hired attorneys, got all the ball rolling. I invested everything into this baby. Now what am I gonna do? I've got to go and make it happen. So I go all the way there, and it's not a pretty story, like how I got there and how I did it. Like it was really broke. Like I was just like, I invested everything into the baby, and I'm like, I didn't plan for failure. I planned for it was gonna be on TV. They were gonna pay me some money. I had some advertisers lined up. Everything was gonna go good. And I didn't have a plan B. I didn't have any investments to back it up. I was putting all my money into that. And it was a challenge, so I had to make it happen. And thankfully, I missed a meeting with a interactive television company that was funded by a company called Endemol. And Endemol is John DeMol and Joop van Ende. And they had just sold their company called Endemol, which is a TV production company, which did the show Big Brother.
Okay.
So they had sold it for $5.5 billion to Telefonica. So these billionaires saw what I had, promised me the world. They're venture capitalists, and I didn't get the world.
Yeah.
Because I was young and I didn't understand contracts. I used their lawyers. I had a lot of promises, and I just wanted my baby to work. So I just wanted to make it happen. It was one of those things that I didn't have all that stuff in my business life sketched out, as I later did with my wife, who I've been with for the past 10 years and very happy with today.
Yeah.
So it was a very, let's say, trying time for me, because I'd basically given up my soul to a venture capitalist. They own me.
Yeah.
They said, fly to Amsterdam, you're gonna live here now. You're gonna drive the car we tell you. You're gonna show up at the office when we tell you. You're gonna go to this event when we tell you. I was their slave. Yeah. Even though I founded the idea and I thought I was like this genius, you're a genius, you're a genius. But when the music stops and the party's over,
we own you.
We own you. Yeah. So it was good. We did a lot of work with MTV.
I'm sure you learned a lot.
Oh my goodness.
Right.
I learned an incredible amount from the experience.
Which makes it not a failure.
No.
Not at all.
It's a failure that I learned from. Yeah. Absolutely.
Yeah.
I thought it was going to be that one. You always think it's going to be, that's the one that's just going to be,
life-changing.
The life-changing end game.
Yeah.
But for most people don't ever see that.
No.
And that's why the investment side, like you were speaking to, is so important.
Yeah.
Because not everybody, there's just only so many spaces for billionaires and multimillionaires.
Yeah.
And we can all strive for that, and we can all get to a certain level. But sometimes life gets in the way, whether that's health, whether that's an injury, whether it's, your need for the business just stops.
Yeah, and it's like, look, why not have an investment plan? If everything goes great and you become a billionaire, God bless you.
Yeah.
Right? And
it's
then
even more.
You've got two funds, right? You've got two sources of income. And hey, if you don't become a billionaire, well, now you've made
But as entrepreneurs, we pay ourselves last.
Yeah, and also, I read, or I don't think I read this, I think an accountant once told me this. They said, look, as an entrepreneur, your investments should be conservative, okay? Because your risk, you don't need to have a lot of high risk investments, because your business is your high risk investment.
Correct.
Right? Yeah. So
correct.
True. All right, so continue your story.
I agree with you.
Yeah.
So 2009 happens.
Yep. That was a good year, huh?
Yeah, we were at 7 MTVs. We just had launched my show on MTV Asia. So
was this the whole being able to text in thing, or that's?
This was uploading your videos to television. So it was the buying and scheduling of airtime was what I patented, which is payola.
Yeah. Where
we would sell 30-second slots on MTV.
Okay.
You divide it up, and you just upload your video. You buy the time slot. Like
so I'm a record label.
You're a guy on MySpace at the time. You could have been just an independent band on MySpace.
And I could buy some time and throw it on.
And you could buy some time,
be seen on
put it on
MTV,
MTV, and be on terrestrial television.
That's huge.
And we created a bunch of formats around it, and it was great. Everybody said, this is going to revolutionize TV.
Yeah.
We were a little bit ahead of our time.
Just early.
We were early.
This is internet's up.
No, the internet's up, but it's new internet.
Yeah.
So it's YouTube is just brand new. It's not like my kids watch YouTube, they learn everything in the world from it. It was just, a few channels of people. Not many people knew how to, most people had those big Sony cameras that,
It's a brilliant idea. I mean, is anybody even doing that today, where like a consumer can upload a video to television?
There were some copycats,
Okay.
and we hired a big law firm. So a lot of my money went to patents, which I don't suggest to anybody, because what I learned from that experience was if you don't have enough money to fight the guy, and he had $200 million, and my attorney said, do you have $200 million, Adam? I said, not yet.
Yeah.
Not yet.
Right.
And it put this in my mind, man, I need to get $200 million because that guy has it and he can just steal from me. And there's nothing I can do about it because he's going to outspend me legally.
Right.
So it was like that great lesson that I learned. We brought it back here. We brought it to 50 Cents people, to G Unit in New York. And they're like, yeah, it looks really good. I'll take it to MTV. Let's do our due diligence. And then they found the guy that stole it from me. So it was like,
and they went with that guy.
No, they just didn't go with it because there was going to be litigation. You know, lawyers get in the way. They stop everything.
Absolutely.
All the magic.
Oh, totally.
In a lot of cases.
Totally.
Okay.
Yeah.
So I was kind of like, you know, what am I going to do now? 2009 happened. We couldn't get any more money because even the money guy said, hey, we're not even though they promised the money, it was in the deal structures. They said, deal's off.
Yeah.
We're not doing it. It's just not happening.
Yeah.
And a lot of people really got hurt in that crash because in Europe, it was 2009. I was in Europe, so it was in Amsterdam at the time. And here was 2008, but it really affected the whole world.
Over there was the GFC. That's what they call it, the GFC, Global Financial Crisis. Yeah.
Yeah.
Yep.
And nobody really, being an entrepreneur, I didn't plan for it.
No.
I didn't plan for it at all.
It killed everyone's business. I was watching something last night, it killed Disney's business.
Killed it.
I mean, Disney was like huge, right?
Yeah.
And nobody was at their parks.
Yeah.
Yeah, so everybody got hit.
Everybody got hit.
Yeah.
So I got hit with that, and I vowed after, you know, getting stolen from me that, A, I didn't have enough money.
Yeah.
And I did well for myself, and I had successes in business, and I made money.
Yeah.
But I didn't make that kind of money.
Yeah.
So I'm like, you know, I've got to get to that level. I've got to really find something. So I put it on my list of what I wanted. And what I wanted, well, where's the money made? Okay, we talked about it. The money's either made in real estate or it's made in the stock market. It's made either investing. Yeah. And me being an entrepreneur, I wanted to invest in companies. And that's what you do in the stock market. Right. In real estate, to be honest, you are investing in something that in order to get value from it, you have to raise the price, which means you have to take money from somebody else. Like if you own a building, for example, and you have rents. In order to make more money, you're not creating more land, you're raising the rent.
Correct.
So it's essentially non-entrepreneurial because you're not helping someone. Yeah. As entrepreneurs, we like to help people. We like to find that solution that's going to make their life better.
You're not increasing the value proposition. You're just increasing the rent.
Most of the time.
Right.
That's how it works.
Yeah.
So that's why I went to the stock market side. So I just formed the intention that this is what I want. Mm-hmm. So I was doing some internet work at the time, just random things on the internet, because with doing the Uploaded TV project, I had a team in India and I had a team in the Netherlands. So we had about 100 guys in India, about 40 guys in the Netherlands, and my core team in the Netherlands stayed with me. So we were still working on small projects, building websites or little apps or different things like that. And I always knew that you had to be in the proximity of money to get it, right? So you can't go hang out with the poor guys and get rich. Right. It just doesn't happen. It's kind of like the real estate guys, right? So they got to go knock on the door to collect the rent all the time. It brings them down a level instead of up a level because they have to stoop down to the level of the guy, hey, you're 2 weeks late on rent or 3 weeks late on rent. And I wanted to be with those guys who are at the top level. Yeah. And those guys are in the stock market. And where did I find them? So, we journeyed back from Europe with my new wife that I made the list on, and our children, and we started growing our family. And we first went to Florida, of course, because I'd spent too much time in the cold weather. Russia was freezing. East Germany was freezing. The Netherlands was raining all the time. And I also put on my list of what I wanted was to never see snow and bad weather again. Right. Thus, I'm here. Florida. So I try never to go to bad weather if I don't have to. Yeah. Right. So in our travels, we came down to Florida and we went to a couple areas that weren't right for us. The demographics weren't us. The people weren't right for us. Being a family and having kids, we moved over then to the West Coast, to Marco Island, Florida, where it was perfect for us. Everybody is 70 years old. So everybody's your grandma or your grandpa. So it's a really, it can be a really nice place when you encounter the right people.
Sure.
And there they have a hotel, and a very nice hotel, one of the best hotels in the world. Actually, Tony Robbins does his health and wealth mastery there.
Okay.
Yeah.
What's the name of that hotel?
The JW Marriott.
Okay.
So I was a member of the JW Marriott Hotel because I wanted to surround myself around people who were better than me, who can get those things on my list that I wanted to get me. Maybe I'm going to meet a stock market guy. They have all these wealthy guys coming in to see Tony and all these different things. And I was.
And they're not better than you. They just experienced a higher level of success than you.
Absolutely.
Right.
I always want to be around people who are more successful
Absolutely.
than me. Absolutely.
They bring you up.
Yes.
Yeah.
And I mean that from a financial basis at the time.
Yep.
So, I spent a lot of my time in the sauna.
Mm-hmm. Talking to ballers.
Talking to ballers.
Yeah, right.
Yeah.
Absolutely.
And how can I help you?
Yeah.
And one of the old guys there turned out he was a publisher.
Okay.
He's a book publisher. And he wrote this book for this guy who was a NASA mathematician, who's now my partner. So they actually wrote 6 books on investing. So what happened was, Ron Grinke is the mathematician that I eventually partnered with when I said, I didn't learn math, so I could just partner with the mathematician. And this man who wrote his books, and he found him because, he retired to Marco very young. So he first started at NASA on the Apollo spacecraft, okay? So literally was doing the mathematics with punch cards.
Yep.
Punch cards to steer, Houston was steering this ship all the way around the moon,
Right.
okay? I couldn't figure out how they did it, but
Right.
this guy knew how to do it.
Well, the fascinating thing, too, is have you been to NASA? Have you seen the tin cans that the astronauts went up in?
Yeah.
They're basically these like garbage cans, right? I mean, it's unbelievable.
And he was in the control room. So anybody that says that stuff didn't happen,
Right.
I have firsthand knowledge, it absolutely did.
Yeah.
So just wipe that
Sure.
right off the
Yeah.
off the map.
Right,
so
right.
he was in there controlling everything.
Yeah.
And then he went on to work in satellites. So for the CIA, a top secret security clearance for the CIA, spying on the Cubans during the Cuban Missile Crisis.
Yeah.
And we all know that was a long time ago, right?
Yeah.
And they had high definition photography back then.
Yeah.
So you got to think about what they have now.
Oh, yeah.
Right?
Unbelievable.
So lo and behold, he got into one of the first networking. So basically, he went into business for himself and partnered with another company. And he actually started creating some of the first networking inner offices where you could basically have an internet inside your office and connecting computers
like
in the office.
Novell networks were the early ones.
Exactly.
Yeah.
So he started working with that. The company was Com10.
Okay.
And AT&T bought them out. Came in and said, okay, looked around. Okay, we're going to close this down. The internet's never going to be a thing. And they gave him a big chunk of money.
Yeah.
That was it. So he took his money, went to Marco Island, got a house, still a young guy, and he was living life, right? Had the Rolls Royce, had the beautiful house on the water, the boat, the pool, everything you can want, right? So he had this chunk of money, he had to do something with it. So what he did was he created this big engine. So he was driving a Rolls Royce, kind of like a Rolls Royce engine on a private jet. He created this engine, and it was for himself, like say a money machine or a money tree. He's described it many different ways like that. Essentially, it's the golden goose we talked about in the golden egg scenario that actually goes into the stock market. It crunches 6,000 stocks and ETFs every single night, over 1 billion data points to find the what and the when, okay? Real boring stuff. Nobody, when you get on an airplane, you just want to know that you're going to get to your destination. You don't care how the Rolls-Royce engine works.
Right.
But he wrote a bunch of books, and in his books, he details about how the engine works. And for most people, that doesn't work, right? Because, I can see how it worked, but it's not going to get me anywhere. So he came to me, and through his publisher in the spa, we need a nice jet built. And I hear you're a good jet builder. We built web platforms and interface and large scale it. And I said, well, I'll take a look at it. So he wanted his engine, his algorithms to be put up into the cloud and to really crunch and mine more than they were, because it was more passive to where he had to go look for it. And now he wanted to crunch. So I said, okay, it's gonna be about $1 million. He said, okay, I'm an old guy. Well, I don't know if I really want to run this business, but to step it back a little bit, how he got into it was they all saw him driving around in his car with the pool, asking him, well, how did you get that?
Yeah.
Everybody wanted to know. That's how he wrote the first book. So it was like, how did you do it? So he wrote the book about the engine, and that didn't work because nobody can run with an engine, So it's like, it worked for him, but it didn't work for everybody else. So then they asked him, well, can we get your software? The actual software that you use. And he said, well, yeah, you can get it, but he built it for himself. So he went there, and that's when he came to me actually to build the plane, which is the software for, people to use. And one of the things we've been doing is we started something called Done For You, because Ron's goal was to help investors, average investors, make above average returns. Because he knows the math. He knows how to do it. And I thought that was something that was possible, right? That we can just train anybody to do it. But one of the things is like abs, right? There's a reason only 1%, which is 1 in 100 men, have abs.
Yeah.
It's a lot of work.
Right.
It's a lot of diet. It's a lot of starvation.
Yeah.
It's a lot of pain.
Yeah, it's one thing to know how to do it. It's another thing to actually do it.
Right.
Right.
So we've been teaching people for a long time. Ron's been teaching people. We've been doing seminars and webinars and books and courses and all these things. We're basically training pilots, right, to fly the plane.
Right.
And what we realized from that is that business people, entrepreneurs, wealthy people, they've got their own life, their own plane to fly.
Yeah.
And, we showed a lot of people how to fly the plane, but usually what happens is
They want a pilot.
they want a pilot.
Right.
Exactly.
Right.
So that's basically what we've done.
So tell us how the platform works and what you do for your investors.
Yeah. So we've really taken it a step further. So we've got the books, we've got the courses, we've got the engine, and we've got the flight training school, so everybody can, jump on the flight and learn how to fly the plane.
Yeah.
But as you said, doesn't really work for most people.
Yeah. Most people want it done for them so they can focus on growing their business or living their life.
Absolutely.
Yeah.
So that's where we've taken things a step further, and we've established Globus Wealth. And Globus Wealth, what we actually do, so how Warren Buffett, how most of rich people make their money is on options. It's a rich man's game, okay? It's a lowered risk scenario. You hold stocks for shorter periods of time, and you sell options.
Right, so you're selling puts and calls, basically.
We're selling puts and calls,
right,
correct.
right.
And for those of you who don't know what a put and call is, don't worry about it.
Okay.
We're selling contracts, and in any shape in the world, let's say you're a businessman and you sell on Amazon, you only make money when you sell.
Yeah.
It's the same thing with the stock market because it's only companies. So we're buying companies, and then we're selling the option for somebody else to buy those companies from us, and we get paid for giving them the right to buy it at a certain point in time.
Selling premium, covered or uncovered calls?
Covered.
Covered, okay.
Yeah,
so you're also buying the underlying stuff.
We're always buying the underlying stock with good fundamentals. So we're always making sure we're investing in good companies that can survive a 50% market crash, okay? So Ron the mathematician has baked that into everything. So he's done all the models, he's done, all that hard math to make sure that no matter what happens, we're gonna be okay. But when you're flying your own plane, it's really good when the weather's good, right? It's great. You can just actually hit autopilot, which is what we have. We've got a great autopilot system. It basically takes off for you. You get up to, cruising altitude, and everything's fine. When you're on a sunny day, you're seeing the clouds and everything is nice. But that bad weather comes, that turbulence comes, and the first thing the pilot does, a good pilot just holds on and knows that he's gonna get through it.
Right.
When you try to pilot your own plane, you start looking for parachutes.
Right.
And that's the problem.
Sure.
You know, and that's really what we fix at Globus Wealth, is that we just pilot the plane for you. And our philosophy has always been a client-centric philosophy, because we started with, you know, Ron just wanted to help investors, okay? And we did the books, we did the courses, we did the pilot training. And the best way we found out that we can help investors is the way I think finance should work. So in a way, I think I'm redefining finance. Because I don't think that someone that you hire to make you money should get paid unless they make you money.
Sure. As opposed to conventional fund management where they get paid either way.
Right.
Yeah.
Your mutual fund,
Yeah.
your 401k,
Yeah.
your hedge fund, wherever it is,
Percentage.
those finance guys, whether they perform good or they perform bad, they make money, they cover themselves, number one. The client is number two.
Yeah.
And our philosophy is, if we don't make the client money, we don't deserve yours. So we give a fixed rate of return and guaranteed, but it's not really a guarantee, okay? So what I mean by guarantee, it's 12.5%, is that the client gets the first 12.5% annually.
Okay.
We, as the pilots, Ron, who's managing things, and his co-pilots, we have Tommy Brown, we have John Willem Corver, we've got a whole team behind us that's flying the plane. So you can just sit in the back in the nice, plush interior, unlimited champagne, beautiful stewardess is waiting on you with the finest foods, okay? And the guarantee is that if we don't get you successfully to your destination, well, the flight's on us.
Right.
We don't get paid. And that flight is 12.5% annually, okay? It's a long term, okay? The other thing you gotta remember, your house, most entrepreneurs won't blink about getting into a 30-year mortgage. But you tell them we have a 20-year investment plan, they're like, whoa, 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 that's a long time.
So do they have to stay in for 20 years? If they want to get out at year 5, can they get out?
Absolutely.
Okay, so they can get out whenever they want.
Absolutely.
You're saying to them, look, you should have a 20-year spectrum here, window, but if somebody has to get out of an investment, they can.
If somebody has to get out, they can invest, but what we prefer and what we set it up for is that you can resell it to other people, which in most financial, like I said, we're a new paradigm in investing because we built a better product than exists. That's what we do as entrepreneurs. We find a problem, we build a better product, and that's what we've done here. So instead of going back to the mutual fund, taking the penalties, or going back to the hedge fund and taking the penalty and say, I need out because you got a health problem, or your kids need college funds that you didn't anticipate, or some unexpected event happens, if you really need that money and you really need to get it out, instead, you can just resell those contracts. So we've done it in the form of contracts. Since we make our money, like Warren Buffett and most really successful investors, by selling derivatives, that's what our product is. It's actually, we walk the talk. We actually practice what we preach. We're selling exactly what our investment strategy is to the end client.
Sure, and if somebody wants to sell those, would I be correct in assuming that a lot of time you have people coming in that would be interested in buying them? I mean,
absolutely.
So that's not.
But above that, you have to think about this. Now, by giving a 12.5%, okay, you can predictably know what every contract, because there's 21 contracts over the period of 20 years. There's the first contract, which is the initial investment, and then there's the gains every year of the 12.5% that's issued in other contracts. So we allow those to grow over time, okay, in a predictable manner. So a lot of times everybody says, Adam, what's your definition of success? Predictability.
Sure.
Predictability. So you can know in year 5 exactly how much you made on year 1. Well, you can't do that with gold. You can't do that with straight stocks. You can't, if you buy Apple, you don't know what it's going to be like in 5 years.
Because you're just like an annuity, if you will.
Right.
So and people leave them in, they compound, or maybe they take their percentages. What about transparency? So anytime, especially with Madoffs and things like that,
We always get that question.
Yeah.
We always get that question.
How does that work?
Okay, so the first thing we do is we publish everything we do.
Okay. Every trade?
Every trade.
Okay.
We publish every trade, every position, straight from the broker account. So there's an API that goes into the back office so you can see exactly where you stand.
So you can see the trades being made daily?
After they're made.
After they're made.
After they're made. We couldn't produce it beforehand, or there may be people who are inside and
manipulating or whatever, right?
And went ahead of us or something like that. So
right.
after they're completed, we do that. We audit that. The contracts are all put onto the blockchain.
Okay.
So to make sure that those contracts are verified. So what happened to the contracts? What really happened? Because what really happened with Madoff was he didn't do anything. He didn't buy any companies.
Yeah.
He had no oversight. So we have auditing, we have all that stuff in place.
So you have a third-party auditor?
Absolutely.
Okay.
Absolutely.
Cool.
Absolutely. We have our own accountants, we have third-party accountants.
Wow.
And then we have the brokerage firm itself, which is the custody holder. So we're actually bonding that capital. So you're buying a contract, have another trading company that we actually buy a bond from those contracts. So we separate that so that bond is always linked to that broker account. So no matter what happens, you can always go back and say, hey, we're the first right holders on that bond. We need to get paid. Like it's very easy to be transparent. The way that they do things now, where you don't really know where you stand. You don't really know, here, how much money am I gonna have? How much money is this really making? They publish some really nice things when you get a prospectus and it says, high growth, and then it says, 29%. But that 29% was probably what they did over the last 3 quarters.
Yeah.
It's not what they did over the last 20 years.
Right.
So that's more like 2 to 4, or maybe even, if you're lucky, 6%. So, you have to, do your due diligence and understand what it is you're getting from most of these mutual funds or hedge funds or anything there. That 2 and 20, how much am I really paying? All that stuff is hidden. We don't have anything hidden. We only take a success fee. So you don't have to worry about fees. You're getting your 12.5%. If for some reason that year we don't make 12.5%, it rolls to the next year. Yep. Okay? So over time, you're going to get it. And that's the main thing about investing. It's not something that happens overnight. You have to be in it for the long term. So Peter Lynch, right? The most successful hedge fund manager of all times, 29% on average.
Mutual fund manager.
Mutual fund,
yeah.
Yes. What his clients received was 7% on average. He did 29%, but his clients received 7%. And why is that? Because they didn't understand the math. Right. They were very emotional beings. Yeah. They were thinking that they were the pilot of their own ship, and they were making their own decisions. When they saw that it was up to 40%, they bought in on that news. I saw this flashy prospectus that said 40. But then the very next year, it may drop to 30. Yeah. And then if they get out, they didn't do well, right? Because they got in high and they got out low. Yeah. The main secret is being patient. That's the same thing with business. Yeah. Successful business, you've been doing business for a long time. Long time. I've been doing business for a long time. None of this happens overnight. Right. And it's the same with your investing. It's slow and steady as progress. They say, well, we know how much you do historically, Adam. Why don't you give more than 12%? Because we keep a reserve.
You need to, for the lean years.
For the lean years. Right. We keep a 17% from the success fee. We take it out of our own success fee. Okay? Yeah. We pay the clients first. Then out of that success fee, the first thing we do is we keep a reserve so that we can always pay the client back. Gotcha. We've done the mathematical models. Our number one priority is making sure that that client gets what they ordered.
So they get 12.5 per year.
Yep.
You guys may make more. You may make less.
Correct. We may make nothing.
It could happen, but no matter what, they're guaranteed their 12.5, correct?
Correct.
Okay. Beyond the 12.5, what are the fees?
There are no fees.
Is that baked into the 12.5?
Yeah.
Okay, got it. So
it's
right.
no fees.
That makes sense. Okay.
It's compounded growth. Gotcha. And because it's a derivative, okay, you're not paying taxes annually. So the difference of a mutual fund over the same time, paying out at the same percent. So let's say you could find a mutual fund that paid 12.5%.
Right. Sure.
Okay? The difference is astronomical in what you actually get, because in a mutual fund, you have to pay the taxes annually.
Right.
So being a options contract, you actually don't pay taxes until you exercise the contract. Yeah. So it benefits you to actually allow it to grow and compound tax-free, because compounded growth is where the majority of those investing guys really made their money. Right. That's really where everybody makes their money, because it's time, and timing, right? It's just being in it, the time, having the patience, and then, of course, knowing what to do and when.
That's very interesting. So they don't pay the taxes until they actually take out the money.
Correct.
Which is very cool. Unless you're in Puerto Rico, it doesn't matter because you
Right.
don't pay capital gains tax. We happen to be shooting in our Puerto Rico studio today.
Yes.
Yes.
And you're even able to change beneficiaries. So if you wanted to, let's say, leave, so you get 21 contracts, if you have your daughters, your grandkids, you want to do wealth planning for the future.
Sure.
Okay, this product isn't for somebody that, needs the money.
Yeah.
It's for somebody who has extra and they want to invest. It's for the guy that makes $1 million and he wants to chip off 10% of that and start investing, consistently and really start paying yourself. Because this is essentially what I call it is the entrepreneur's, an ERA, an entrepreneur's retirement account.
Okay.
So I'm an entrepreneur.
Yeah.
No one's ever looking out for me.
Right.
And I like to solve problems, and I believe this is the solution. And I believe it wholeheartedly. We've been at this Ron's been at it for 30 years, okay? The specific product that we have, the software, has been 20 years, okay? So it's not some flash in the pants. It works during this scenario. It doesn't work for this scenario. It works over time. It's proven. We've done the exact approach that we've done now. We've done the testing for the past 4 years, publishing all of our trades. Okay, we publish them on a weekly basis, and they've been very successful.
Over the last 4 years, you paid out 12.5% interest, correct?
No.
Okay.
Okay, so this wealth management product is very new.
Okay.
We've come to Puerto Rico to set it up here.
Okay.
So originally, we've been venue shopping for the past year.
Okay.
Of where the best place would be for people like me, right? For American entrepreneurs to invest.
Okay.
Okay, and Puerto Rico still happens to be America.
Yep.
So you don't have all those problems if you try to invest in something offshore or something in Europe. There's all these different filings and complications, and we just wanted to keep it a little bit easier. And we've been blessed with the situation that we have here to be able to provide the best possible scenario for investors and for entrepreneurs like myself.
So why is it better here? Is it because for you as a company, the taxes were more favorable? Why Puerto Rico?
Well, because everything we do is a capital gain.
Right. That's what I thought. Because you're in and out, in and out, in and out, and so that's why there's no short-term or long-term capital gain. So this would be the place for it.
Right.
That's why.
And Puerto Rico is more new school. So the other financial places, we looked into Cayman Islands.
Yeah.
I've been back and forth talking to those guys.
It's also challenging to get U.S. investors to feel comfortable with your Cayman Island company.
Absolutely, it's not America.
That's
Here, it's a very short trip to come see us in Puerto Rico from Florida. A couple hours on the airplane, you're here. You still have Sam's Club, you still have Costco, you still have all the comforts that you'd have being in the States, and you get that American stamp.
Totally.
And it's really, I think, the best decision that could have been made
for sure
for a product.
So we're tight on time. We're gonna give some information below in the show notes of how people can work with you. Just out of curiosity, I'm sure if anybody's interested in working with you, the next question they have is what's the minimum investment? So what is the minimum investment?
Yes, for the ERA product. So we're doing a special offer for entrepreneurs right now. So we're gonna let them in at $100,000.
Okay, so 100,000 is the minimum.
Okay.
Typically it's not the minimum.
It's $1 million.
Got it.
Okay, so we've been getting a lot of, and I don't know how long it's gonna last for. Okay, because it's just a lot more people, and
totally. At the end of the day, we want to work
know.
with less people that have more money.
We're doing $400 million. Okay, we're stopping at $400 million. We're not gonna go over that point, and once we're full, we're full. Okay, the reason that we're doing something lower is because it allows entrepreneurs to at least get some help. Okay, at least get something where they don't have to be at the pinnacle. They could be doing good, making $1 million a year. You shore away $100,000, and then at least in 20 years, that $100,000, you got $1 million sitting there. So even if your business doesn't go the way you planned, or if there's some unexpected, a lot of people are solopreneurs, where their sole business is dependent on themselves, and if they get sick, their business doesn't make money.
Totally.
So this is where I say it's the entrepreneur's retirement account.
Yeah.
It allows you that security to say, okay, I'm not gonna think about it for 20 years. I mean, yes, you can go log in, you can look inside your vault, you're gonna see exactly where you stand, what you got, and how it's being made. but you just can confidently know exactly how much you're going to have in a 20-year period of time. And that 100K turns into $1 million.
Yeah, in what period of time?
20 years.
So 20 years, $100,000 investment compounded.
10 times.
That's your mill.
10 times, exactly.
Now, it's actually, but we're talking about 20 years, not 10 years.
Correct.
But that's $1 million.
Yep.
Got it. Okay,
20
cool.
years is $1 million.
Yep, got it.
It's 10x in 20 years.
Got it, 10x in 20 years.
Yeah, 10 years, you know, you're doing well. You're doing much better than where you started.
Right.
But it's that time, and timing. You really have to be dedicated and patient to really reap the benefits. Once you get into, listen, if you're really into it and you go 40 years, the $1 million in, okay, turns into $10 million.
Right.
The $10 million over another 20 years turns into $100 million.
Yeah. That's pretty awesome.
That's the power of compounding.
Sure.
That's the power of compounding that a lot of us don't realize. So the sooner you start, that's why we lowered the price for entrepreneurs, just so they can start.
Yeah.
Because the longer you can start for, the better off. So if you're in your 20s and 30s and you're killing it on Facebook, or you're killing it on Instagram, or your Amazon shop or your Shopify is doing really good.
Yeah.
Start chipping away. Forget about that fancy watch. Forget about that Lamborghini.
Right.
Just put that thought to bed.
Forget about bottle service.
Yes. Save it.
My daughter is 18. She just moved out, and I'm just working on her so hard. Just take 10%.
Yeah.
Because you've got time on your side. Okay. So we're tight on time, Adam. Unfortunately, I want to bring you back.
Sure.
So can we do this again sometime soon?
Absolutely.
Okay, great.
Love to.
In the meantime, Adam's latest book. So the very latest, this is the new one, right?
That is.
This is the new one. It's Show Me the Money 2.
Correct.
Right? Show Me the Money 2. We will put in the show notes how you can get a copy of this book. It's written by Adam and his partner. I know I'm certainly going to be reading it. This was the book that came before it. And this is The Secret to Monthly Income for Life.
Correct.
And we will also put this in the show notes where you can get this too. Easy read,
Absolutely.
but allow you to understand exactly what they're doing. Adam Wynn, I want to thank you so much for being here with me today. I look forward to bringing you back again where we can go deeper into this. And until next time, this is Daven Michaels. Live your true life adventure. We'll see you soon.